And so we're going to kind of be all over the map. It's going to be bullish. We're going to do some swing trades using stock. We're going to do some long call verticals. We're going to do some short put verticals. And as usual, I have a ton I want to pack in to our 45 minutes together. So I hope you all had a fantastic long weekend and enjoyed the fourth. If you're Canadian, I hope you enjoyed the first. And wherever you are in the world, I hope you're enjoying all of the great international sports that are happening right now. So, but having said that, let's look at the stock market for the next 45 minutes and see how we can make potentially some income. And in this class, our goal is to average a $200 a week return. And some weeks we overachieve, some weeks we end up not making any money or losing money. But so far, we're on track. Our first goal was $100 a week, and we had hit that by probably the end of February. So we set a new goal, and we're working towards that. So this is trading a smaller account. If you aren't following me on X, I invite you to do so. My handle at Barb Armstrong CS. And I will have someone joining us in the chat. And when they do, you'll want to make sure you're following them as well. Yeah, and I'm also on LinkedIn. So if you aren't following me there and you have a LinkedIn account, I encourage you to go over there because I post different things on LinkedIn often than I do on X. Know that, just a quick reminder before we get into the thick of things, options carry a high level of risk and aren't suitable for all investors. We always discuss and define our risk before we enter a trade. We use the Paper Money software application on the Thinkorswim desktop platform. It is a great place to learn and to hone your skills. Make sure you have a trading plan and that you understand that plan before you consider trading in your live account. There are some nuances and differences. One is that short positions will never be assigned early. So we're going to do a super quick market overview. Kevin Horner does a fantastic overview 4 out of 5 days a week. We've got Mike Fairborn with us in the chat. So hi to Mike, and make sure you follow him on X as well. So we're going to do a super quick market overview. If you missed Kevin Horner's overview this morning at the market open, you can go and catch that in the archives. We don't have a lot to manage today, so we're going to spend the majority of our day on looking at new example trades. Okay, and if you are new to this class, feel free to type a greeting into the chat so we can welcome you. But we started at the beginning of January. We reset the account. It's always a little bittersweet, but we reset it to 25,000. Our max position size is 5,000. And you may say 5,000, like on a $25,000 account, that's a position size of 20%. Like, are you nuts? But we wanted to be able to do some things like, and I know that this is 20% of our initial account size, but we wanted to be able to do things like a buy right covered call or to buy some stock. And today what we're going to do is swing trades, those kinds of things. And so even though our account has grown substantially this year from the 25,000, I think we're around 33 and change. We haven't changed this number. We also haven't changed our max risk per trade, which is around 2%. Now, if you had $1 million account, you may say, well, I want this number to be half of 1%. Which if you had $1 million account would still be, 5,000. Or you might say, I want this number, the max, to be 5%, or you may even want it to be less. But for this account, this is our position sizing, and that's why we're in the moving business, not the storage business. We're not doing a lot of longer term buy and hold. Our focus is on the short to intermediate term time frame, and we're looking to kind of go with the flow of the market. So if the market is predominantly bullish, we tend to be placing more bullish trades. Okay. Can I comment on the cat long call vertical? I do believe that hit our target and we're out of it. But I can check on that because we don't have any long call verticals on right now. So let's bring up So let's bring up our monitor tab. And if we look at CAT, this is our account statement. So we placed a trade on the 29th for a long call vertical at 225, and it hit our target the next day. And so we are out of that position. Okay, so if we come to the charts to look at Caterpillar, we placed it on this day. It hit our target the next day. And this is one of these things where, this may have been what we call a paper money fill. Like if you were in a live account, we may have not been up and hit our target that day, and then it pulled back for 2 days, and we're now rallying. And so this was one of the first stocks I listed, like because we have this Harami pattern, occurring at a support level. This 30-day moving average has been acting as support since the beginning of April. Could we do another long call vertical? And this time, things would be lower. Yeah. Yeah. So if you do this in a live account, sometimes the exits work out a little differently, and sometimes they work out pretty close to the same. But if you're still in that trade, we've got a bullish Harami happening at a support level. And so you might just, continue to just wait. Okay. Okay. So let's do a super quick market overview. When we look at the SPX, whoops. So when we look at the SPX, we had this huge run to the upside. We were kind of consolidating, and I had drawn a panic pattern here. It looked like it was flirting with breaking out last Wednesday and Thursday. And today, we're up, 0.7%, and within striking distance of the all-time highs. So all of this looks pretty bullish to me. When you're close to all-time highs, it's hard to categorize it as anything else. And then the NASDAQ, I mean, we had this extraordinary, move, similar to the SPX, where it came up 35%. So were we surprised to see some consolidation? Not at all. And when we look at this, it's continuing to consolidate, but bouncing off this support level today. And, up 1.7%. The Russell, which is our small caps, we don't tend to trade the small caps as much. So this is 2,000 of the smallest stocks in the Russell 3000, but, really close to an all-time high here. So pretty bullish. And when we look at this move from here to here, up 26%, like holy smokes, Batman. And then the Dow, and some talk about the relevance of the Dow these days, like the Dow 30 is maybe a less significant index to follow, some might say, and this is based, unlike the others that are based on market cap, the significance of each stock in the Dow is based on the price of the stock as opposed to the market cap. So, that's kind of an anomaly. But, again, an 18% move and hitting a new all-time high today. And then if we look at our volatility index, we're down at 15. We're at the low end of where we've been in the last, well, really year to date. If I bring up a year to date chart, this is, we're down at the lower end of the range. So that's showing, many would interpret that as showing a lot of confidence. Okay. Okay. So just to do a quick review, we looked at CAT. When we come over and look at our open positions, sometimes we'll have 15 or 20 positions. We have two short put verticals, one on Cisco and one on Marvell. Both are up dramatically today, still underwater a teensy bit. But if we look at Cisco, it's bouncing off a support level. It's above our strikes. So we're going to just let that continue to percolate. And Marvell, we put this on and it moved up dramatically, came back down to this support level. And today we have this bullish Harami pattern happening at support. It's $6 above our short strike. So, we're feeling okie dokie about that one too. So we're going to let that one percolate. And then we've got one stock with a target, that's Alaska Air. And it's pulling back a little today. We put this on when it broke out of this double bottom, or some would call it like a cup and handle pattern here, and we put a target here, the previous high. And we did this with stock knowing that it might take a while. And so we're going to let that one continue to percolate. And then we have 4 buy right covered calls on, one on American Airlines, and we sold the 19 strike. It's at 1789. So we'll talk more about these, as they approach expiration, but they're kind of doing, this one is in the money. And so we could be called out early if we were in a live account, but we will never be called out early in paper money. But if we were called out on this, we sold this with the intention of being called out, we'd be doing the happy dance, because we'd be out, this expires on the 17th, we'd be out, close to 2 weeks ahead of expiration, and that would be a beautiful thing. But as long as it finishes above this 47.50, we would be called out, and we'd have a gain that we decided before we placed the trade we would be happy with. This is the second call we've sold on CSX. We made $45 on the first one, and we're now up 100 on this one. And if we're called out, we'd make another maybe $50 on this. And keep in mind, this is a small account, so we're going for base hits in this class. We're typically not looking for a home run. Now, I'm saying this, and yet, we're looking for a couple of the trades we're going to place today are more, grand slam oriented if they go according to plan. And if we look at Fifth Third, the most we can make on this is $55 a strike, is if we get called out at $55. We're up 135. It's in the money. It's trading at 57.60. So we could close it out now and we get paid 54.44. We're leaving about $50 on the table, but we're so deep in the money on this. We thought, well, the thinking a trader might have is, what, if I don't need the money to do other things, then maybe I just hang in there for another week and a half for the extra $50. But there's no guarantee. We do have earnings coming up, so we want to be out before earnings, and earnings is on the 17th. So we will definitely close this out prior to expiration. Because earnings is in the morning. So we will not let this go into expiration, because if it gaps up, we're already in the money. But if it gaps down, then we could end up, not happy campers. So we will close this one out, but we'll be meeting Friday and again on Monday. And so we'll discuss those then. Okay, so let's move on to some new trades. So I'm going to start with Intel. So I was kind of rolling along, looking at some different things. And, when I look at this, some might say, well, could this be setting up kind of a head and shoulders? Like, why did I draw this line? Well, because it came back down here and we had a lower low here. But if I'm drawing my line, I see, kind of, we had a big move to the upside. This stock is up 238% year to date. So we had a pennant pattern, and then it's broken out, come down to this 30-day moving average, which it bounced off of last time, kissed again, kissed on Thursday, and then we have this Harami pattern happening today. Now, if you're not familiar with a Harami pattern, I've recorded a bunch of short videos on different candlestick patterns, and I'll show you where you can access this one, because today is Harami Day officially. I think I'm seeing a lot of this pattern, but this is considered to be a bullish configuration that doesn't require further confirmation from a technical analyst perspective. And so if we look at this, could we just do a swing trade and say, you know what, I'm going to buy some shares when it gets up back up to around this 142 level, I'm going to exit the trade. And where might we put a stop? Well, we might say, I'm going to put a stop about 3% below this low on Thursday, this 117.63. And so we're, if we want to put our target on our chart, which I tend to do this in my own personal account, in all honesty, also, because when I'm checking my trades, I can just go look at the stock and then I can see if it's trading at 140, 141.75, and I've got like a candle that's indicating it may be starting to pull back, then I can look at it and go, hey, my target was 142. We're a stone's throw away. We're going to take the money and run. So this is our stock target. This is going to be our stock target. And then under show name, I put on the right. And so now we can see we have a stock. We're going to place a stock target around 142. And we're placing this trade today. So when we go back to do what I call a postmortem, to do a review of our trade afterwards, we can look at it and go, did it make sense that we entered the trade this day? And I'm going to switch this to a calculator. But we're going to put our target in here. If we have $5,000, how many shares can we buy? So we're just going to take our 5,000 and divide it by 124.40. So we can buy 40 shares. Okay. So we're going to come up here to our trade tab. We're going to right click. We are going to buy custom with an OCO bracket because we're going to put in both our target of 142. And our exit would be, I already did the math, 114.10. So we're risking about $10 a share, right? And how much can we risk? Well, 500 to maybe 550 max. And if we're making this 42 shares, oops, not 142, 42, and I click this firecracker and turn it into a paper clip, then when I click anywhere on these lines, it evens them up. So I'm risking about $420. So are we okay with that? Well, is it less than 500? Yes. So we're okay there. And we're risking $10.32 a share to theoretically make $17.58. So if it hits our target and we made that amount, that would be $738 we would make on this. And although that may not be covering, a resort in Fiji for a week where you're drinking something fancy out of a coconut, that could theoretically, if you were looking to generate an income, that's 3.5 weeks worth of our target, right? Yeah, and we do have earnings coming up on this. And so we could, and I looked at that. And so sometimes we try and be out of this, and this is a swing target. So sometimes we don't want to be in these over earnings. If we're close before earnings, we might exit. But if we come back and we say, look at a 1 year and look at the last earnings, what happened? This gapped up on the last one. Now, the one before it looked like it gapped down. So this stock can gap. So if we're close to our target by earnings, then we may decide that we just want to exit that position. Okay. And you may want to come over here and look at what some of the analysts are saying and what some of the press is saying. You can click on read these articles also. Okay. So that's our first one, is Intel. Now, the next one, we'll do our swing trades first. So, and tech, when we look at sectors, what sector has been the strongest over the last uh, over the last 3 months. If we come out to public and we look at sector indices, and then we sort, over the last 3 months, the strongest sector has been tech. So, and looks similar to the NASDAQ. Well, the tech sector makes up half the NASDAQ, right? So we had this big move to the upside. It's been consolidating, and it's kind of unlike the NASDAQ, kind of flirting, which is still in the middle of the pennant pattern. It looks like it's flirting with breaking out. Now, depends on how you draw your line. If you draw your lines at the top of the wicks, this is where, there's a bit of an art to technical analysis. And I had drawn that line a little earlier. You might say, oh, it's right at the top. But it's been a bullish sector. Okay, so that brings us to Micron. You might say, like, did she notice this thing is, $1,000 a share? And I can't believe RiceBird is actually checking out, like, seriously. Okay, so, here's another stock. It's up 253% year to date. It just had an earnings report, gapped up on earnings, and the earnings report, a lot of very solid data was presented. And so if we look at this again, Harami pattern, an inside day happening at a support level. And in fact, this stock has been so on fire, it's hardly come back to the 30-day moving average. This is the first time it's come back since it crossed it back at the beginning of April. But this is considered to be a bullish pattern. And the advantage of placing a trade on a day like today, and you could wait for another day for confirmation, is if you say, well, yesterday's candle, Thursday's candle, 950.28. If we put a stop 3% below that, our stop would be at 921.77, as opposed to waiting till it's in the middle. And then if our target is 1255, if we did 5 shares, that would be just over 5,000, right? So if we say, okay, we're going to do 5 shares, we're going to make our target 1255. And this is why I said we're going to talk about some positions that could potentially be grand slamish, because like if we have a trade where we can make $250, we're pretty happy campers. And this, we're putting in a target at 1250, and times 5. So we could make over $1,000 if it goes up and hits our target. Now, if it comes and hits our stop at 921.77. Now, if you don't like doing math unnecessarily, and it is kind of part of the job of a trader, but if I can have the system do part of it for me, I'm going to embrace that. So it's saying here, we could make, let's call it 244 times 5. If we're doing 5 shares, that's $1,220. Now, if we lost 84.41, like, and my math brain says, we're only doing 5 shares. So if it's under $100 a share that we're risking, we're okay. But if times 5 is 422. Now, one thing about stop loss orders is they are not a guarantee. It's like, so it could gap down and we could lose more, but we have $15 worth of buffer, right? And this says 100. We don't want 100. We want 5. Oh, 106. Price is going up as I speak. So we're going to put this in our stock with targets. And again, we are swinging with this one. This is another swing target. Okay. And then if we want to put this on the chart, oops. There we go. And we're going to make that 1250. Yeah, it's a nice return on risk, our stock target. Because if you're paying $1,000 and you can make 250, that's a 25% return on a stock investment. Now, like, is it a sure thing? Yeah. Anybody that tells you anything is a sure thing, they are pulling your leg. That's a nice way to say they are not telling you the truth. Okay, so that's that one. You want to do one more swing trade, guys? A lot of things pulled back. Like this thing gapped up, so it's come back to like it's up only 252%. Okay. So here's the last one, and this one is the priciest one of all. Like they're all expensive, but SanDisk makes Micron look like a slacker. It's up 657%. So a lot of people would go like, why would you trade something that's already up 657%? Like, are you nuts? Or as my friends from Nova Scotia would say, are you new? Like you must be new here. You haven't figured this out yet. So if we look at this again, Harami pattern, it's our pattern of the day at a 30-day moving average, which might be acting as support. We're still looking at here, you know, low, higher, low, higher, low, higher, low. We had a little bit of kerfuffle up here, but hit a new all-time high back here, June 22nd. And so if we look at this and say, okay, if we traded this back up to what, like 2,300 even, what was the high on this day? 23.48, 23.54, 22.56. So maybe we make it 2,300. And how many shares could we buy? 2. But if we buy it at 17.93, well, let's have the system do the math. Like let's buy custom with an OCO bracket, and we're going to buy like 2 shares. And we're going to put our stop 3% below a recent low. Like we're trying to be consistent in the way we apply things, right? We're going to make these good till canceled. And our target's going to be 23.50. Like that's like $500 a share. And the advantage of doing a stock trade over an option trade is that we have time. And Kay is asking, how do I find stocks with this pattern? It's really sophisticated, but I'm going to show you how to do it. It's my top secret way of finding opportunities. And I'm saying that tongue in cheek. You can see me smiling on your screen. So our stop is going to be at 1642.00. And again, if it gaps down, we could lose more. So we're risking $152 a share. That's $304. Is that less than 500? It is. So we're okay there. We know it could gap down. We could end up out for less. If it goes up, $555.90, don't forget the 99 cents. Yeah. I never use the exit GTC in extended hours. I do not. You probably would have to make them match. We're going to put that in our stock with targets. And again, this is another swing target. Okay. So like if we even got half of that, we would call that a home run. And if we got both stocks and we were up over 1,000, like that's a grand slam. So there's our third one. Now, how do I find these? I did 2 things today. I came and I looked at the Dow 30 because it was hitting a new high. Not a lot came from that. And then what I do is I sort by symbol alphabetically, and I link my chart to my watch list. And I just start clicking through looking for setups. And then I didn't find a whole lot there. and the NASDAQ, and I know the tech sector's been strong. So you could have just brought up the tech sector. I just started clicking through here. And this is where most of them came from. So AMAT was one. Now, this was a Harami pattern when I looked at it a little earlier. So the sentiment has changed. AMD was another one. So, okay, so AMD is bouncing today. Another one up 162% year to date. Like you'd almost think I was making these numbers up, like crazy. And so AMD, you might see like this little pullback, and then it's bouncing pretty dramatically. It's up 8.5% today. And so you might say, well, didn't we miss it? Well, did we? Like, would you have said after it gapped up here, like we've missed it? Or when it gapped up here, or when it gapped up here? And now don't you wish you'd done something at any of these times? Because, it's worked out pretty well. But could we do something more conservative? Now, a swing trade, we'd go from 562 to 584. It's already, made a lot of the distance up to the swing. But could we say, okay, it's at 562. If we came to the trade tab, and this is a very, like even the weeklies are very heavily traded. If we went out to the end of July, this is a $10 wide spread, but we've only it's just over $1 on a $68 option. Could we do a long call vertical, which is just a way, of we're not buying the stock, but we're bullish on the trend. And it's a way when you have a smaller account, it's a way when we have a smaller account of trying to take advantage of an uptrend on a stock that we feel that we may not be able to afford to trade otherwise. Like if we wanted to buy a call, it would cost us almost $5,000. That's our max position size for a stock. And if we spend $4,970 or $5,000 on an option, like we could lose all of it. And our max risk per trade is 500. So here we're risking 473. So we're capping our potential gain. And our example trading plan on this says we are looking for a gain of 50%. So we could technically make, using our confirmation, we could technically make $535. Okay. But what we're saying is if we can get out of this when it's worth $7, and I know $7.10, we're leaving almost $300 on the table, but we don't care. If we can make a 50% return in, a short period of time. And I was actually going to make this. Okay, so let me come back and edit this. July 31st. I don't know why it came up to August. We'd only be in this trade for 25 days. So we're bullish on this. So we then want to get out at 508 times 1.5. About 760 maybe, 762. So let's make it 760. And how many of these are we going to do? Well, we're only going to do one. Why is that? Because we could lose the entire amount. So we're going to make this 760. And our guideline for these, and we have an example trading plan for this, is does it trade 1 million shares a day or more? Check. Is the bid-ask spread tight? Well, this is actually about $4, so that's still acceptable. And this is about $2. And do we have, so that's acceptable, tight being less than 10%. And then do we have at least 20 times the number of contracts we want to trade? Check, check, check. So we have all of those things. Okay, so we're going to put this in our long call vertical bucket. So there's AMD. So Bogus Chinchilla is asking if we want to put a stop in. And I really like that question. The reason that we do this, um, we put in the target but not the exit, is because when the market opens, there's sometimes a lot of volatility in the market. And in my live account, when I put in a target at a 50% up or 50% down, I sometimes would get stopped out for way more than a 50% loss. And then the market would settle down and I wouldn't have been stopped out at all. So you don't have to have that happen many times before you say to yourself, is there another way for me to do this? And so the way we do this is we go in every day and we have a look and we say, are we up close to 50% or down close to 50%? And if the answer is yes, then we have a look. And so I also will put this on the chart. What were our strikes on this? AMD 560, 570. So I'm going to make this 570 because I want it to go through, and we're bracketing the current price. So long call vertical, 560, 570. And it's July 31st is the expiration. So that when we look at it, we can see what we're aiming for. So, I mean, we were here last, Tuesday? We were in the money. Now, just because it's above both strikes doesn't mean you're automatically going to, hit your target on this. But the more bullishly it moves, and then we place this trade today so we can see when we got in. Now, we don't have a ton of time left. There's a couple of things so yeah, we're limiting our max gain on this. We've limited our max gain. We put a target that will cap our max gain on all of these. Okay. But I wanted to show you where to find these Harami patterns. And so if you haven't subscribed to the Trader Talks channel from Schwab Coaching on YouTube, you're going to want to make sure you do that. When you first come in, what it'll show you is what's currently being taught. Okay. And then when you come to playlists, I've created a folder called the Trade Management Mini Sessions. So I just added 3 white soldiers last week. If you haven't seen that one, and then 3 red crows will be kind of the bearish partner to that. But here is what is a bullish Harami. It's under 5 minutes. Okay. Yep. And then I haven't added a swing trading plan yet, but I will do one this week, and you'll see it here in blue. So a swing trading plan, which we've done 3 examples of today. And but you want stocks, if you're doing it with a stock, you want a stock that's heavily traded. You want to know when you're getting out. So, I will create and add one of those. And then here's one for long call verticals. We were going to do a short put vertical today. I don't know if we'll have time for that. We did a bunch of buy right cover calls that are example trading plans. There's an example trading plan for that as well. And then if you're new to Thinkorswim, at the very bottom, there's actually we've rearranged these. The next group here is some short videos on different components of Thinkorswim. And this one on the monitor tab, I show you how to add things like profit and loss percentage and all that kind of stuff to it. Okay. And then at the very bottom, like last week, we added a new one here. And this is really a companion to this class where we place a lot of trades. And when I have a lot of trades hit targets, sometimes rather than going through and calculating the return on investment or, the loss or whatever, I'll do it here and post them here. And so this one we just recorded, I think, and posted last week. Okay, so it's just another resource center for you. There's also a survey in the chat today. And so if you can click on that, there's just 2 questions that takes you about 10 seconds. 1, I hated it, 10, I loved it, and everything in between. You also have the ability to put comments in there. So if there are topics you'd like to see me cover in upcoming classes, let me know. If you like the pace, let me know that. If you'd like to see me go slower or faster, and usually there are people on both sides of that. Yeah, you know, I promise if you fill it out, both myself and the management team will read each and every comment. So what have we done so far? Well, we've done 4 trades. We've done 3 stock trades with swing targets, one on Intel, INTC, one on Micron, ticker symbol MU, and one on SanDisk, ticker symbol SNDK. Then we did a long call vertical on AMD. Now, there were a couple of others that kind of came up that I thought looked interesting. CrowdStrike was one. So you may want to look at CrowdStrike. Fortinet was one. A lot of these are in the tech sector. And a lot of these are hitting highs after a little pullback. So Fortinet was one. ARM Holdings. Well, let's do AMAT first. AMAT. Now, when I first looked at AMAT, that was a Harami pattern, and it's now, you know, having another pullback day. But so far on AMAT, and, you know, up 132%, this could still be just creating this bull flag type pattern, but it's not done pulling back yet, so it would seem. And then ARM Holdings. So ARM is a little more unique compared to the others in that this has come back to a similar low, you know, a similar support level. So here it hung out here for 3 days back in June, and then came down, kissed it on the 29th of June, and then came down and kissed it again on Thursday. And today we have either an inverted hammer, and there's a short video on that, and it's also part of a Harami pattern. So could we come back, if we're just kind of sort of bullish, could we come back and do something like a short put vertical? And we looked at on this one, July 31st, so we'd be coming out and, you know, 25 days, and we need another couple of strikes. And so this one, as long as it stays above the 300, does it trade more than 1 million shares a day? Check. There's a, you know, do we have 20 times the contracts? Check. Is the bid-ask spread acceptable? Check. And then the last question on this is the juice worth the squeeze? So if we can get paid $2 and we're risking 3, because $5 minus 2, so I look at 2 divided by 5. Our rule of thumb is that we want at least, if we're in it for 18 days, we're not in it. If we're in it for 25 days, we want at least a 25% rate of return. And we're looking at a 40% rate of return. And so because we're risking $300, we're only going to do one of these. But just to show you another, this is, I'd say, bullish to neutral. As long as it stays above 300, we're good to go. We're going to buy this back when it's worth about 40 cents. When we've got 80% of our max gain, we're going to say, hey, good enough. You know, another tech stock. So we're going to put that in our short put vertical. Now, somebody asked where I can see this profit and loss. So one of the things that I've done with all of my groups, and you have to set this up by group, you come to your Sprocket and I just start typing in P&L, and I've added the P&L percentage so that when it comes to my verticals, so we now have a long call vertical, we can see how much we're up or down by. You know, and here's ARM. We just added this one. And typically because of the spread, we'll end up being down a little bit. Now, these two we were underwater, we did look at, but they're up today. So guys, that's a wrap for today. I appreciate you being with me. We did a lot. We placed 5 trades today, 3 stock trades. one long call vertical, one short put vertical. And I appreciate you being here. Whether you're brand new to this class or you're one of, as I affectionately call them, the usual suspects, I appreciate you being here. Thanks to Mike Fairborn for his help in the chat and the guys behind the scenes for helping bring this class to life. Have a really awesome day. Up next, Mr. James Boyd. You'll want to stay tuned. Take care, everyone. Bye for now.